Picture yourself in 1995 staring at a flickering CRT screen, a 56K modem screeching as it connects to the internet, and a world that feels full of possibilities. The 90s were a time of boundless optimism, technological dreams, and a financial revolution that changed everything. Today, in 2025, we're at another turning point, but the lessons from the 90s can still guide us to invest smarter. So how can that decade of Tamagotchis and floppy disks teach us to thrive in a world of cryptocurrencies and artificial intelligence? Let's step back in time. The 90s were defined by the dot-com boom, those tech companies that promised to reshape the economy. Everyone wanted a piece of the pie, from startups to novice investors. Stocks of companies like Netscape skyrocketed, even without generating real profits. Does that sound familiar? Think about cryptocurrencies today. Projects like Bitcoin or Ethereum have sparked the same excitement, with valuations soaring based on promises. In the 90s, many invested without understanding the fundamentals, and when the dot-com bubble burst in 2000, the losses were massive. Take a second to think. Have you ever invested in something just because everyone was talking about it? It's human to follow the crowd. But the 90s show us that you need to ask questions. What makes this opportunity solid in the long term? Let's go back to the dot-coms. The companies that survived, like Amazon, had a clear vision and solid execution. Amazon was selling books online when no one believed in e-commerce. They built strong foundations, even amidst the frenzy. Today, look at artificial intelligence. The companies leading AI, like those developing language models or automation solutions, aren't just chasing a trend. They're solving real problems, just like Amazon did back then. Look for companies with a clear mission and tangible results. Think of AI as the early days of the internet. In the 90s, no one knew exactly how the internet would transform our lives, but those who bet on companies with a lasting vision, like Cisco or Microsoft, thrived. Today, AI is at a similar stage, full of potential, but also risks. Let's pause for a moment. If you had to invest in a technology today, which one would you choose? What feels like it will have a lasting impact? Take a moment to reflect. Another lesson from the 90s, diversification. Many investors put everything into a single dot-com, and when the bubble burst, they lost it all. Diversified portfolios with stocks, bonds, and other assets held up better. It's a timeless strategy for 2025. Imagine your portfolio as a team of 90s superheroes. You wouldn't want everything riding on Superman, right? Having Batman, Wonder Woman, and others balances the strengths. In the same way, diversify your investments to reduce risks. The 90s also taught us the importance of patience. Many sold their Amazon shares at the first sign of trouble. Those who held on saw their investments multiply by hundreds. Patience is a powerful weapon in 2025, especially in a volatile world. Think about cryptocurrencies. Their values fluctuate wildly, just like dot-com stocks back then. If you believe in their long-term potential, staying steady might be wiser than panicking. But again, do your research first. Another interesting parallel, retro fads. In the 90s, everyone wanted the latest gadget, like a Walkman or Game Boy. Today, NFTs or trendy tokens remind us of that frenzy. But how many of those gadgets are still used today? The lesson here is not to get swept up in trends. NFTs, like Beanie Babies in the 90s, might be short-lived. Invest in assets with lasting value, not just temporary hype. Ask yourself, will this still exist in 10 years? Let's take a moment to breathe. Imagine you're in a 90s coffee shop, listening to Nirvana on a jukebox. What investments feel as timeless as a great CD? Share your thoughts in the comments later. I'd love to hear them. Now let's talk about the mistakes of the 90s. Many investors borrowed money to buy dot-com stocks. When the bubble burst, they were left in debt. In 2025, avoid investing with money you can't afford to lose. It's like playing Pokémon on a Game Boy. You don't put all your rare cards into one battle, do you? Keep a safety net, a financial cushion. This gives you the freedom to take calculated risks. Another thing the 90s taught us, the importance of fundamentals. Companies without solid profits often sank, even with a cool concept. Today, look at financial statements, not just promises. A profitable company is like an old Nokia 3310, reliable and durable. Think about AI again. Companies spending billions without clear revenue risk collapsing. Look for those already generating profits or with a clear path to profitability. It's a direct lesson from the 90s. Let's pause again. What companies seem solid to you today? Do they have profits or a clear plan to get them? It's a key question for investing in 2025. The 90s also remind us of the importance of information. Back then, investors relied on magazines or brokers for news. Today, you have X, blogs, podcasts, all at your fingertips. But beware, too much information can overwhelm. Filter out the noise. In the 90s, rumors about dot-coms drove stocks up for no reason. In 2025, be wary of viral posts or influencers hyping investments. Always verify sources and data. It's like picking a CD in the 90s. You didn't buy the first shiny one, you checked the track list. Do the same with investments. Read financial reports, not just headlines. It takes time, but it's worth it. Another lesson, market psychology. In the 90s, the fear of missing out, FOMO, pushed people to buy at the peak. When the bubble burst, panic led them to sell at the bottom. In 2025, control your emotions. Imagine you're playing Super Mario. You don't jump into a pit just because everyone else does. Make rational decisions based on your strategy. It's easier said than done, but it's essential. Let's take a moment to think. When have you felt FOMO in your investments? How could you stay calmer next time? It's a reflection that can change your approach. The 90s also showed us the importance of innovation. Companies that stagnated like Blockbuster vanished. Those that innovated like Netflix thrived. Invest in companies looking to the future. Today, leaders in AI or renewable energy are the innovators. They're pushing boundaries like Apple did with the first iMac. Look for companies that don't rest on their laurels. This ensures sustainable growth. One final lesson from the 90s. Simplicity. Many got lost in complex strategies, thinking they guaranteed success. Investors who chose simple indexes, like the S&P 500, often outperformed. In 2025, don't overcomplicate things. A diversified ETF can be like an old Walkman, simple, reliable, and effective. You don't need a super sophisticated portfolio to succeed. Sometimes, less is more. Think about it for your next strategy. So, what do we take from all this? The 90s teach us research, patience, diversification, and discipline. In 2025, apply these lessons to crypto, AI, or any new trend. Your financial future will thank you. If this trip back to the 90s has inspired you, share your thoughts in the comments. What lessons will you apply to your investments? And if you want more tips like these, subscribe and give a thumbs up. Together, let's build a smarter financial future with a touch of nostalgia.